What if I told you that one man once made $1 billion in just one day by taking on one of the world's biggest banks? Sounds like something out of a movie, right? But it's a real story about a trader who almost caused a financial meltdown and earned the title of the man who broke the Bank of England. Curious about how he pulled off such an incredible feat? Stick around, and let's dive into the high-stakes world of George Soros and his jaw-dropping billion-dollar trade. Number 1. The rise of a financial maverick. In September 1992, a Hungarian trader shook the financial world to its core. This wasn't just any trader. This was George Soros, a name that would become synonymous with high-stakes financial maneuvers and a billion-dollar payday. But how did Soros, a man from humble beginnings, come to achieve such a monumental success? Let's unravel the story. George Soros was born in Hungary in 1930, during a time when Europe was grappling with the chaos of World War II. His early life was marked by hardship, but Soros was determined to rise above his circumstances. Unlike many of his peers, Soros saw education as his ticket to success. He pursued his studies with fervor and eventually earned a place at the prestigious London School of Economics, a decision that would set the stage for his future triumphs. After graduating, Soros dived into the world of trading. His journey began with various trading roles, but his real breakthrough came in 1970 when he founded the Quantum Fund, later known as the Soros Fund. This hedge fund would become his primary vehicle for making daring financial bets and earning substantial returns. Number 2. The exchange rate mechanism, ERM, and Black Wednesday. By 1992, the financial landscape was fraught with instability, especially for England. The European exchange rate mechanism, ERM, was a system set up to stabilize currencies across Europe by enforcing narrow bands of fluctuation and maintaining fixed exchange rates. Its goal was to create economic stability and convergence among European currencies, leading to a unified European currency. However, the British economy was struggling with a severe recession, which made it increasingly challenging to keep the pound within the ERM's prescribed limits. This situation presented a golden opportunity for George Soros. The ERM required participating countries to actively intervene in the currency markets to stabilize their currencies. For the UK, this meant buying pounds to prevent its value from falling below the ERM's lower limit. Soros, with his keen financial acumen, recognized that the pound was significantly overvalued. He anticipated that England's efforts to prop up the pound would be unsustainable in the face of the economic pressures it was facing. Number 3. The million-dollar trade. On September 16, 1992, a day etched into financial history as Black Wednesday, George Soros executed a trade that would become legendary. Soros, known for his bold strategies, decided to bet against the British pound, a tactic called short selling. Essentially, this meant Soros was wagering that the pound's value would drop. Soros and his team at the Quantum Fund made a massive move. They borrowed and sold $10 billion worth of pounds. This was no small gamble. It was a monumental bet on the pound's downfall. The rationale behind this bold strategy was rooted in Soros's keen analysis of the economic situation in the UK. He knew that the British government was struggling to keep the pound within the confines of the European exchange rate mechanism, ERM, which was designed to stabilize currencies by maintaining fixed exchange rates. As Soros anticipated, the Bank of England was compelled to intervene to support the pound. This intervention involved buying pounds to prevent its value from falling further, but it created panic in the market. As more and more traders followed Soros's lead, the pressure on the pound intensified. The Bank of England found itself buying pounds at ever-increasing prices, but despite their efforts, the pound's value continued to drop. By the end of the day, the Bank of England was in a dire financial situation. The pound had plummeted by 15% against the US dollar and a staggering 25% against the German mark. The scale of the decline was unprecedented and shocking. The outcome of this high-stakes gamble? Soros made a jaw-dropping $1 billion in profit in just one day. This audacious move not only cemented Soros's status as a legendary financier, but also nearly brought the Bank of England to the brink of bankruptcy. The event had profound consequences, leading to the UK's exit from the ERM and marking a pivotal moment in financial history. Number 4. The aftermath and legacy. The impact of Soros's trade was profound. The immediate consequence was that the British government had to withdraw from the ERM, allowing the pound to devalue significantly. This event became known as Black Wednesday and marked a turning point in both British economic history and Soros's career. Beyond this single trade, Soros's financial strategies continued to influence global markets. His quantum fund, through a combination of risky bets and strategic investments, became one of the most successful hedge funds in history. Soros's approach to trading, particularly his use of leverage and understanding of market psychology, became the stuff of legend. However, Soros's influence wasn't limited to financial markets. He used his wealth to support various causes through the Open Society Foundations, which he established. These foundations focus on promoting democracy, human rights, and social justice worldwide. By 2019, Soros had donated approximately $32 billion to charitable causes, further cementing his legacy as not just a financial wizard, but also a philanthropist. Number 5. Challenges and controversies. Despite George Soros's remarkable successes, his career has not been free from controversy. His aggressive trading strategies have often faced criticism, particularly in countries where his actions have led to significant economic turbulence. A notable example is the Asian financial crisis of 1997. During this period, Soros targeted the currencies of several Southeast Asian countries, including Indonesia, Malaysia, the Philippines, and Singapore. His actions were blamed by some for exacerbating the economic downturn in these nations, leading to severe financial instability and economic hardship. Soros's involvement in various political and economic spheres has also made him a polarizing figure. In India, for example, his influence has been a topic of debate. Critics argue that his financial maneuvers have contributed to economic issues in the country, adding fuel to the fire of controversy surrounding his impact on global markets. His involvement in political causes and funding various organizations through his Open Society Foundations has further intensified scrutiny and debate. Despite these controversies, Soros remains a significant figure in the financial world. His innovative approaches to trading and his substantial philanthropic efforts continue to influence global markets and societies. His legacy, marked by both groundbreaking successes and contentious debates, underscores the complex nature of his impact on the world stage. George Soros's remarkable feat of making $1 billion in a single day is more than just a story of financial prowess. It's a testament to the power of strategic thinking and risk-taking. His actions on Black Wednesday changed the course of history and demonstrated how a single individual could influence global markets. If you enjoyed learning about how George Soros made billions in a day and want more intriguing stories from the world of finance and beyond, don't forget to hit that like button and subscribe to our channel. Your support helps us bring more amazing content your way. Thanks for watching.